Hello everyone, my name is Matthew Frailey with BreakpointTrades.com. We've been bringing you advanced technical analysis, market commentary, trade ideas, and mechanical trading algorithms like you see here. Been doing this since 2003 for individual traders and professional institutions, which I discuss with on a daily to weekly basis. All right, it's been about 2 weeks since I did a video, and I'm going to be going on vacation here for 10 days. So let me get started with this market newsletter. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. This is our comprehensive market newsletter from Breakpoint Trades for Sunday, July 31st, last day of July 2022. I'm also recording this on YouTube. I haven't done a YouTube video for 2 weeks. This is our back end if you're viewing us on YouTube. This is what we send out. This is to our subscribers via web page. So no reason to show you the audio recording portion here, so I'll adjust this down. All right, again, hope everyone's had a nice Sunday so far, and it's been about 2 weeks since I did a video on YouTube. Basically, if you watch that video, our market calls have been pretty damn outstanding. On that last video, 2 weekends ago, I discussed how the indexes were in these consolidation phases, but we were looking for an upside move initially on the S&P to fill that open gap at 4020, then get a little pullback and then get higher prices there up to 4200, 4250, something like that. And that has all played out. We've had a bullish bias for the last 2 weeks, even the last month, and that has played out. This newsletter is divided into 9 major sections. If you're new to YouTube, these weekend newsletter videos take about an hour, so it's very comprehensive. It's not a short 5 or 10 minute YouTube video to get your attention. These tend to be very comprehensive. These videos are for folks who are serious about technical analysis and don't mind taking the time to study. They don't need everything condensed down into a 1 minute TikTok video, for example. The first thing we're going to discuss too is our open systems, which have done absolutely fantastic this year. All right, couple things. Administration note right here. I will be leaving August 3rd in the morning. Will not be back until August 13th. This is important because regarding our SPY and ES systems, as you know, they've done very well this year. We've had something like 37 trade signals from the SPY systems and over 30 trade signals from the ES systems. And they're still in open long trades. If any new trades occur while I'm gone, James Rowe will be sending out the trade notifications, not Steve. But one thing is important. You know, James is not myself, so he doesn't know this stuff as well as I do. He will not be discussing the systems in depth as much as I do. He'll just be sending out the trade notifications if there are any new trades. And he will not be emailing out option trades for the systems as we do. Okay? That's too complex for him to do. James is a tech guy, IT person, so he doesn't know that stuff. Anyway, if you wish to do options on your own, what I typically target for is SPY call or put options, depending on if it's a long or short trade. I target roughly 2 months out to give it time, which is more than enough time on most of the system trades. And I target options, the first entry a 0.65 delta, second entries right around a 0.6 delta, and there's a rare third entry about a 0.5 entry delta. Okay, so you can, target those options yourself if you wish to do those. Okay, now as far as the market, again, I would suggest on YouTube, but especially on our web page standard newsletter formats, go ahead and read all the text here because I wrote very detailed text of what I see for the market. So as you know, July is over now, and the market had a very strong rally. S&P was up 9% in July. Triple Q's up over 12.5%. Seasonality played out. We expected July to be an up month. It usually is seasonality-wise, and this was no exception. Again, July is typically one of the strongest months of the year, and we've seen that play out, along with earnings season. Even though earnings haven't been good, the market has responded favorably to them. Okay, so that has played out. And we still view this as a long-term bear market. And Our target area for this bear market rally is somewhere around 42, 42.20, maybe 4,300 if you get lucky. But we view this as a bear market rally. Okay. You know, I still see a lot of folks commenting about, hey, could the bear market possibly be over? Is that it? I mean, anything's possible, guys, but here's the one thing I want to tell you about. Just given the backdrop of everything, this everything bubble that we've had, all asset classes were in a bubble, you know, from the stock market to real estate to Bitcoin to Rolex watches, anything. The sheer amount of money and debt out there, the Fed, all these Federal Reserve governments around the world, all boxed in. I think this could be a real doozy of a bear market. Okay. In fact, a lot of you really need, I think, to shift your thinking over. Instead of constantly looking for a reason why this bear market decline might be over, we might go into a new bull market. Instead, you need to reverse it. Right? You need to, I don't think a lot of you realize the severity of what's possibly coming. You need to strategize and have a plan for the next major decline. Because again, I don't think any of you have any idea of how bad it could get. And again, guys, realize I'm an optimist. Over the last, 15, 20 years, I've always looked mainly on the long side. I look for bottoms and declines. I typically have a bullish bias on things. But I'm telling you, with what I see, things could get unbelievably bad, worse than you can imagine. Again, just trying to prepare you guys, because some of you are still stuck in that, looking for bottoms all the time. So what we're watching for here is what we want to strategize is how we can position short after this bull market rally is over, because the next decline could be a doozy. Okay. Now, let me get back to short term. Okay, short term on Friday, the VIX closed below its lower Bollinger Bands. So short term, we're quite overbought here. I wouldn't be surprised if we get a pullback right away as of Monday because of that VIX. I think right now a pullback will simply be a wave 4 from a wave 3. Then we'll go up again in 05 to that 4,200, 4,220 area, whatever. All right. So that's what I'm thinking. Short term, though, looking for a little pullback here. Also, timing windows, August 5th to August 8th is a timing window based on Fibonacci time zones. Some other things to note, gold, precious metal stocks looked better last week. We'll see if they can continue to follow through. As you know, that area's been rancid this year. US dollar remains in a bull market. It's been a decline. I'm looking for the bull market to eventually pull back to its 50-day moving average. The yield curve is strongly negative. We're in a recession. So despite, we're in a recession because of the 2 negative GDPs in a row. Again, we're in a recession despite the despicable actions of Yellen and this administration to redefine the rules of a recession because of politics. All right. And anyway, guys, let's move on and get started with this discussion. So first off, we're going to discuss the systems here. So we still have a couple open reversion to mean system trades. So here's the systems. So here's ES, one of this is our ES bear long. It's a system that looks primarily for long opportunities in bear market conditions. You can see there's been 3 trades since May, all winners. This last trade entered on, I think it's July 13th, basically one day before this higher low bottom, and it is still long. That trade is up something like over 350 S&P points. That is an amazing trade. We still have this open position. We also have an open position from the breakout. The breakout took 2 entries, and it's still long here, and this is nicely profitable. And it has a profitable higher low stop at 40.60. We already took one of the trades off manually. I think we took 2 of them off. So we locked in some nice gains, and we still have open position here and here. Here's an example of some of the short systems. The SPY, you can see it's done some shorts. It caught this short opportunity really nicely here. Good thing because then the market rallied. Another version did not exit here. It exited here instead for a little loser. I did make some edits on these shorts. One thing we're going to do in the future is whenever we get that reversion to mean, like you see here, even if the system is trying to hold a little bit longer, like it did here, we're going to exit the majority of that position on that reversion to mean, just in case you get something like this. But otherwise, the systems have done extremely well this year. Like I said, I'm going to be out of the town from August 3rd to August 13th. So if there is any new system trades, James Rowe will be sending them out via trade notification. Okay. Next, let's look at the open or the trades for this year. We're in a bear market. These systems do best in bear market conditions because of the volatility. We have 22 systems. 21 of the systems look for long opportunities and short opportunities. There's 9 systems that look for shorts. There's 12 systems that look for longs. And then we have one system that looks for, it's not reversion to mean, it's a breakout. But here's the trades this year. There's been 36 total system trades that we've sent out for the SPY systems. And you can see, you know, for the SPY systems, I do a very conservative entry of $5,000 per entry, which is very conservative for ETFs, guys. I'd imagine the vast majority of you are doing much larger positions than that. And you can see if you just followed our system trades this year, you'd be up about $7,500 on the ETF portion. And again, if you're not a subscriber of Breakpoint Trades, how this works, whenever these systems are going to do a trade, we send out a trade notification to let you know what the entry is and what the exit is. So if you want to follow mechanical systems, trading algorithms, you want to be told what to do, when to enter, when to exit, these systems are for you. So while our general newsletters, you know, we give ideas on the market, trade ideas, things like that, you know, we leave it to you to take our information and make your own decisions. With these systems, we make the systems make the decisions for you. And you can see they've done a good job. Not all the trades have been winners this year, but the vast majority are. The one we locked in last week with this bear long on that was established on 6/13. We exited on 7/29, so we held that for 46 days. The number of you can see the average time the systems have been in these trades collectively are about 6 to 7 days. These systems are end of day, so they're easy. It's something you could easily work a day job because the trades come at the end of the day. You don't have to monitor the market during the day. Next, image number 4. This shows you the trades for the ES. So I also run the same 22 systems against the ES futures. And I show on the website as MES. That's the micro ES contract. You know, ES futures are hard to stomach. You know, the margin and everything else if you have smaller accounts. MES is 1/10, so I show by that. And you can see how it's done this year. You could be up $16,000 if you followed the exact trades I sent out this year. Not bad, and we still have open trades on the bear long, which was established on 7/13. That is up $1,600 on only one contract. And we have the open long positions on the breakout, first entry, second entry. You can see what they're up here right now. So great job. Again, also the nice thing about the ES systems, guys, you might say to yourself, I don't trade futures. That's fine. You don't have to trade futures to follow these systems. Whenever the ES systems here do trades, you could just simply trade SPY related ETFs, SPY, SSO, UPRO, SPXU in place of the ES futures. Remember, those ETFs trade well into the after hours. I show the trades as ES, MES here just because it's cleaner, but you can trade these against the ETFs. Okay. Again, they've done very well, and you can see there's been 35 trade signals on ES. So overall, they've done awesome this year because of the market volatility. So congrats if you've been a member of Breakpoint Trades and you've followed these systems. If you consider what a membership cost at $300 for 6 months, you can see just the ES and SPY alone, you'd have made, and with the options, you'd have made over $30,000. Next, Let's go and move back to the general market. So we covered the system. So let's move back to the general market. So here's our index sector table, what transpired last week and on Friday. Again, the markets had strong moves from Wednesday, Thursday, Friday. You can see the Friday moves were 1.4% on the S&P, 1.9% on the NASDAQ. Solid gains for the week here. S&P up 4.3%, NASDAQ up 4.7%. Again, we've had a bullish bias on the market for the last 2 to 3 weeks, and that has played out. As far as the major market sectors, for the week, everything closed up except for retail, down about 0.25%. Big gains there on the energy area and metals and mining. Next, currencies, US dollar. Let me start over again there. I had a distraction. So currencies, US dollar, nice pullback last week. That, of course, helped a lot of the commodities, especially the precious metals, which we'll get to. Cryptocurrencies were up nicely for the week. Again, I think these are largely going to move with the market. So if this is a bear market rally and we get a big decline in the fall, I think cryptos are going to get destroyed again. So be aware of that, guys, if you're in a bunch of that crap. Commodities all nicely to the upside except for sugar. Nice moves here. Corn up 9.9%. Copper up 6.7%. Crude oil up 4.2%. Precious metals had a nice gain for once. Gold up 2.1%. Silver 9.1%. Gdx, the miners, up 3.4%. Bonds here, high yield corporate gained with the market. TLT and the 10-year was down pretty strongly. Next, item number 6 shows the economic news calendar for this week. Monday, we have ISM. Be aware of that. ISM also on Tuesday, factory orders. Friday's the big jobs report. Remember, I'll be gone from August 3rd to August 10th. We're also still in earnings season, guys, so that could affect the market as well. All right, let's go ahead and jump to the index charts. So what I like to start with on the index charts here, we look from a top-down fashion, so we start with the bigger picture charts. So here's the monthly view of the 5 major indexes. The Dow at the top, S&P, NASDAQ, and IWM small caps at the bottom. So as you can see, nice solid monthly gains. Dow was up 6.7% in July. S&P was up over 9%. The NASDAQ was up about 12%. You have these solid bullish engulfing like candlesticks. Again, we expected this. You could see the Dow was basically at the lower monthly Bollinger Band. The S&P was near it. The NASDAQ was at it. NDX was at it. The IWM was at it. So these were logical bounce areas to expect the market to put in some sort of bear market rally. Plus, July is typically one of the strongest months of the year seasonality-wise, with I think December being the strongest. But, we expected a rally, and that's what we've gotten. I do think overall this rally will fail. We'll form a lower high. Maybe around these middle Bollinger Bands would be a good area. Then we'll start our next major decline. Next. Chart number 8, here's a weekly view of the major indexes. So again, we put in a low there in early June, and it was choppy at first, but we've had a nice move up, especially last week. We did have a little slight symmetry break on the Dow and the S&P. So this bear market high could still take a little bit of time to form because of the symmetry break. One idea would be we form a higher low, then try to push again, and that'll be a top. Next. Chart number 9, here's the daily view of the major indexes. Again, we've had the bear market decline. Remember, my newsletter 2 weeks ago, I discussed these consolidation triangle-like patterns, ascending triangle-like patterns, and we broke out of these as we expected. Here's the S&P, and we've had a nice rally up. Initial target was filling this gap back here. Our next major target is 4,200 to 4,250. Again, if we have a really good bear market rally, could we get up into this area, 4,300? There's the 200-day moving average up around here. It's possible as well. Next. Let's move on to the S&P 500 charts. Then we'll look at the other indexes. So here's the S&P monthly going back to the 2007 time frame. So we had that last major bear market in 2008. there's a lot of you guys who weren't around then. There's a lot of folks who've never experienced a bear market like that. So anyway, back in December, early January, we said that was the end of that bull market, basically a 13-year bull market. We said we were entering a bear market, and that was our premise, and that has played out. So here, this shows a parallel channel on this logarithmic chart. We pull back at the lows. We're a little bit, around a little bit below the middle portion of this channel. So what we think over time, form a lower high and then decline again. Okay. Next, let's look at a bigger chart. So here's another S&P chart. This one goes back to the early 90s. And one thing that also supports a bear market is this 14-link stochastic. In bull markets, it tends to find support around this 50% area. You can see during the last bull market, all the major declines found support at the 50% area. Even that sharp 2020 decline that was about 30%, you can see that held. But during bear markets, the stochastic typically falls below it, like in late 2000 for that tech bubble bear market, and 2008. Okay, you can see that stochastic is well below the 50% area, so it also suggests that this is some sort of overall bear market. Now, what I think over time will be, okay, so let me start again there. So what I'm watching for is this rally to find resistance around this 20-month moving average that I have in cyan. That's also the same as the middle monthly Bollinger Band. Again, it's not perfect, but usually you'll find the middle Bollinger Bands, the 20-month moving average, tends to be a major area of importance in long-term trends. So in the last bear markets, you could see price fell below the 20-month moving average and then back tested it during that major bear market rallies. 2008 here. That ended up being the high of those early bear market rallies. And we could see the same thing possibly here. Get up into this area, it's around the 42.5, 42.50 area. Again, you can have a Pinocchio move through it, a little slice through it, but ultimately I think price will close below that and then we decline again. Next. Chart 12, here's the monthly view on the S&P. You can see that wedge just playing out. We're not near this kind of target area zone. And again, ultimately, we think we'll form some sort of lower high here. But it has been a nice move up in July. You do have a cross up on the weekly MACD. Next. Let's move on to the S&P closer time frame. So here's the daily view. Shows from the beginning of the year. We had that major bear market rally in March. And then we had these consolidation patterns in early July. We favored an upside break. Our initial target was this 40-20, technically 40-18 gap, which was hit. But then ultimately we expected higher prices, and that's what's been happening since last week. We had those 3 strong up days, Wednesday, Thursday, Friday. Just looking at symmetry, price has been following that pretty well. The initial symmetry move from here basically measured to fill in this gap, which was achieved. Another symmetry would be taking this move and adding it to here. That measures close up to around this 50% fib, right around that 4200 area. And then you have the 4230 area at the 50% fib. You also have this downtrend line here that also could be a target over time. Next. Let's show you a variety of these daily charts. So here's another daily chart. It shows you that how we're viewing this uptrend is we're in some sort of C wave move, which should have 5 waves. Right now we have 3 waves, 1, 2, 3. So what I would expect is soon get a 4, then a 5 up. Okay, and then get some sort of decline, maybe a lower high. I think it's something like that. That's just a guess. Next. Chart number 15 is another daily chart. This shows you the same thing, the symmetry move projection up around this area, this 42.50 42.30 area, and then maybe get an ABC pullback. Could even get a rally again to a double top or even a slight higher high, maybe by late August. Seasonality wise, the market tends to be very weak in September, so this would play out with seasonality, but ultimately we're looking for another decline. Or we form a lower high like I show here in red and then a decline. Ultimately, we'll see where this plays out, but it may need time here, just to get through earnings and part of August for all this to play out. Next. Chart 16, here's another daily chart with the fibs. Again, we closed right near some resistance on Friday. Get a little pullback here. So far, the rally off the lows has been about 500 points. A little bit larger than that last rally, which was in March, 479 points. We closed through the 50% fib here, closed right on the 100-day moving average in purple, 50% fib, 42.30. Next. Chart 17, here's a daily chart showing some cycles. So this shows the moon cycles, which I'm not big into the moon cycles, quite honestly, guys. I know a lot of people follow these. The reason why is there's 2 moon cycles a month. And, people point out, hey, you had a moon cycle right at this high and right at this high and, right at this low. But the problem is you have 2 a month. And if you give them a plus or minus so many days, odds are going to be pretty high that you're going to hit one of these. But to me, what's more important right now is that right around August 5th, will represent 34 days from this July 14th low. So 34 is a fib number, so that could be a timing window. Another timing window I heard is August 8th. So kind of brown in here could be an area where the market may form some sort of high if we get up into those areas. Next. Chart 18, moving out of the intraday charts. Here's the 2-hour time frame. Again, shows this fractal, shows how we view this as some sort of C wave move up as an X wave. The 42.30 would represent a 1.618 fib extension we've been talking about. Again, guys, remember we viewed this consolidation we had for these couple weeks as bullish as a wave B. I hope you guys bought that for a nice long opportunity because it's been pretty nice. The SPY and ES systems were long during this time and have caught this trade. The ES systems are still long. Even the daily KISS systems went long, which I'll show you below later. Next. Chart 19, here's a 60-minute chart. Shows you this initial move up here, bull flag, and if you do a 1-to-1 symmetry, project it from here, you get a target of around 422. Next. Chart 20, here's another 60-minute chart. And this played out just exactly. So we viewed this as a wave B and see these lines. We didn't even adjust these lines. Price ended up following these exactly. And ultimately, we think this goes higher. Very short term, we are very overbought. Look at these RSIs. Notice your moving average ribbon is really wide here. You can see it was pinched back here. That was, good buying opportunity. It wasn't here. To me, especially with this little doji candlestick, may be due for reversion, pullback in the short term. Next. Chart 21, here's the zoomed in view of the S&P 60-minute chart. So it really shows you this. We had an ABC pullback here coming into Tuesday last week. Moving average ribbon, it was squeezing, pinching there. Things were set up for a rally. We said to look for a rally there. We got it. Now, we've had a big rally here. Wide moving average ribbons, overbought RSIs, inverted candlestick on Friday. So it looks like a logical area to expect a reversion, pullback, okay? Especially given that the VIX closed below its lower Bollinger Bands. I'm not looking for a major sell-off, though. I'm looking for this pullback to be like a wave 4 of some sort. So a buying opportunity. Next. Chart 23, here's a 15-minute chart. Shows you the wave structure we're kind of monitoring. Wave 2, wave 3 here. Get a pullback and maybe be some sort of wave 4. Then up again on a 5. Next. Chart 23. This was the chart we discussed last week on Tuesday. We said to look for a rally. because we had 5 waves down. Whenever you have 5 waves down, clean waves, you look for a trade reversal, and that's what happened. Then Wednesday we gapped up. In fact, you could have bought this gap up. That was a breakaway gap, and then we had a good rally the rest of the week. As of Friday, you can see we have a little wedge here with MACD divergence, so it looks like an area to have some sort of, wave 4 pullback. Next. Chapter 24, here's another 10-minute chart, shows you the wave structure here. Again, it appears to be maybe some sort of wave 3 up here, get a 4 pullback, ABC-like, and then up again in 5. It'll be on that 5 that I'll be looking to establish some pretty good short positions on the market. Next, let's dive into the KISS trend systems. Here's the weekly S&P KISS trend. As you know, it went back long about 3 weeks ago with the DVT stop at basically at the lows there. But as I said, guys, these KISS trend systems are designed primarily to keep you invested in bull market conditions with higher low ratcheted trailing like stops. But we're not in a bull market, and I don't think this is the end of the bear market, so this isn't something I would be using at this point, honestly. Next. Chart 26, here's the daily KISS chart. Now, even the daily KISS charts in bear markets, I really don't like them either. But it didn't have a horrible entry here. It went back long here about a week and a half ago. Things were very overbought there. Could have bought this pullback. It does have 3 DVTs here now. These moving average ribbons did flip slightly back bullish here. That's one reason it went back long, was a break over the ATR and these moving average ribbons. Okay. Should we get up to those higher levels, 4,200, 4,250-ish area, perhaps we'll get a 4th DVT, and maybe by the time this stops out, it'll be more of a wash break-even trade, kind of like you had back here in March. It was more of a wash trade. Okay. Next. Chart 27, here's the various cycles, the daily over here, the half day. These cycles have been pretty good. That's last buy cycle. We broke through that resistance cycle. That's a breakout. Now, short term, we got a DeMark 9 on the 130-minute chart. So we're quite overbought here in the short term, and the ribbon's pretty wide. These ATRs are now support on pullbacks. Next. Chart 28, here's the triple Qs. Daily chart. Again, we had this ascending triangle looking pattern. Remember a couple weeks ago, favored a breakout move. We got that move initially to symmetry, pull back higher low. We found support right at the 50-day moving average there in red and rallied up. Now we're at this resistance. Next big resistance would be this downtrend line, essentially from the January, December highs. Next. Chart 29, here's a 2-hour time frame. Next. Chart 30, here's a 15-minute time frame. Very similar look to the S&P. You got a little wedge here, look to it, some divergence. Next. Chart 31, here's the daily KISS. Again, very similar to the S&P KISS. Went long back here, you had a pullback. You have 3 DVTs right now. Perhaps we'll get another, if we get a 4th DVT up here, maybe it'll be up around entry. Next. Chart 32, here's the cycles. Again, very similar look to the S&P cycles. We have a DeMark 9 on the 130-minute up here. You can see the DeMark 9s, the 130-minute price has been responding to these. DeMark 9 here at this little high, DeMark 9 low at this low, DeMark 9 at this peak, DeMark 9 at this low, and now we have a DeMark 9 here. Next. Chart 33, IWM small caps. Again, they had this nice coil looking pattern a couple weeks ago. Favored a breakout to the upside, and we got that. The initial target was filling the gap, and we've now broken this downtrend line. If we have if the bear market rally lasts for a while, could it even get up to the 200-day moving average up here? Perhaps. Next. Chart 34, there's the 60-minute time frame. Shows you a little closer view of that coil that had formed. So there you go on the indexes, guys. Again, we'll see what happens this week. Too bad I'll be on vacation from the August 3rd to the August 10th. Steve Nelson will be here doing the newsletters, and James will be sending out the trade notifications for the systems. Let's move and look at some indicators. Chapter 35, here's the VIX. So again, as I've been stating, the VIX closed slightly below its lower Bollinger Bands here. So because of that, the market, be on watch for the market to have some sort of pullback in the short term. Next. Chapter 36, here's the daily VIX chart, another one we've been following. We've been looking for a pullback to this support zone. We've tagged the initial part of it, so that's an area to know. Or if we were to go into this area, that would be an area I'd look for the VIX to bounce. Next. Chapter 37, here's the very cool chart. It's the VVIX with the correlation to the S&P here. And this thing played out again. Whenever the VVIX becomes uncorrelated with the S&P, tends to occur near market inflections, highs and major lows. Okay. In fact, that little pullback we had into Tuesday last week, that occurred, we had the uncorrelation spike, and then ended up being a nice little buy opportunity. Next. Looking at some of these other indicators, here's the S&P, percentage of stocks that are above their 50-day moving average. Remember, this was pointing out to a potential decent trade bottom back in June. That obviously played out. You could see, even going back to the last 14 years, that was in a pretty oversold condition. So obviously that has played out. It's worked its way up back at the here now. Next. Chapter 39, here's the other one we were showing back there in June and July. This indicator, percentage of stocks in the NASDAQ above 50-day was buried. You had a divergence. The 50-day was buried. You had a positive divergence. So everything, again, lined up for a pretty good rally in July, and that's what we got. Next. Chapter 40, here's a chart also that called for a bottom back in June. The S&P versus the 10-day, inverse 10-day put call. You got a positive divergence in this versus, the S&P. I will say short term, though, this indicator is moving down while the S&P is moving up. So a little negative divergence is setting up. Next. Chapter 41, here's the NASDAQ highs minus lows at the top. It is approaching that 0% area, so be aware of that. Getting very close to zero or even going a little above could be an area to watch for, rallies to end. It's been a pretty good guide this year. Every time it approached zero, end up being little highs in the market. Next. Chapter 42, here's the S&P with the NIMO, McClellan Oscillator. So what I've pointed out here before in the past, whenever the NIMO, after a bottom, spikes above its upper Bollinger Bands, it's usually bullish short term, and you get a rally lasting at least a couple weeks. So that's obviously played out this time. It spiked over here back on July 20th. So far, we've had a nice 2-week rally, just like in the past here. Next, moving on to bonds, chart number 43, high yield corporate. They've been a bright spot in the market lately. They had a double bottom back here in June. That was a positive for the market. And they've broken below this downtrend line, so that's a positive as well. This is a positive potentially for the market because this is the largest rally in the overall downtrend. This rally is much larger than any of these in the past. So it does favor maybe when it does a pullback, a higher low, and another move up because of the symmetry break. And perhaps the market would do something similar. Next, let's discuss the yield curves. Okay, here's the yield curve, the 10-year divided by the 2-year. It's strongly inverted. Okay. Next, chapter 45, here's the yield curve. This is the difference instead of the division. It's the 10-year minus the 2-year. You can see how strongly negative it is, well below the 2006-07 time frames. So again, guys, we are in a recession. We've had 2 negative GDP numbers in a row. That is a recession by definition, despite what Yellen and the Biden administration is doing, trying to redefine a bear market. I've seen Wikipedia change their definition. To me, that's utter nonsense. It's despicable action, and it's being done just because of politics. So I don't care if you're a Republican or a Democrat. If you're a Democrat, you should be angry that, part of your party is doing that just because of political pandering. We're in a recession, folks, and these predicted it. Next. Chart 46 is the 10-year Treasury yield, down 5% last week. Again, we pointed out that the long-term rates were going to have a pretty good pullback. We pointed this out well back in late May, this black candle doji candlestick. You also had the super wide moving average ribbon, RSI divergence. Everything was set up, and this has been playing out. This has also caused that yield curve to go inverted because long-term rates pulled back while short-term rates went up. Next. Chart 47, here's the big, 50-year or 40-year chart of the 10-year Treasury yields. Again, we broke out of this 35-year channel line, got up some resistance. I would expect this downtrend line, this 35-year downtrend line to act as support. And once this pullback is over, rates will go up again. Next. Chart 48, here's the daily view of the 10-year. Overall, 10-year may be on a course to go down near its 200-day moving average. Next, let's move to market sectors. So this image is from July 15th, my newsletter 2 weeks ago. I discussed how all these sectors were in these tight consolidation patterns. Look at this, coil patterns, sideways, coil channels, etc. We favored a breakout to the upside of these patterns, and that's exactly what happened. Chart 50 shows you the updated version of those charts. You can see here all these patterns broke out nicely to the upside. Okay, so that what we favored played out. Let's look at some individual sectors. Chart 51, here's XLK Technology. Again, broke out of that pattern. Higher low here, rallied up. Downtrend line is your next resistance and 50% fib area. Next. Chart 52, here's the Semiconductors. They've also had a nice move. They broke this tight channel here. There's another downtrend line approaching up here. Could be a target. Next. Chart 53, way back in June, we gave this as the long opportunity, the SOXL. That's the 3-time semis. Your low risk buy opportunity is way back here, around $10. It's basically doubled. Great trade if you took it there and held it. Next. Chart 54, transports. They had a bull flag last week, which we gave as a long, and they busted out on Thursday. Big follow through on Friday. This up here is now your resistance. Next. Chart 55, banks. Been meandering their way higher. Still look okay. Next. Chart 56, energy. This area's had a nice move, especially last week. Closed over its 50-day moving average. Really, the second retest and recover of the 200-day moving average was your low-risk buy opportunity. Also, you had a 61 fib retracement there. This was your swing trade opportunity we discussed. Next. Chart 57, here's oil services daily, or XLE 2-hour. We pointed out this falling wedge a couple weeks ago. Hope you took it. It's more than played out. Next. Chart 58, oil services. They've also played out nicely. Now, overall, oil services are weaker than energy. They're just back over their 200-day moving average slightly. Next. Chart 59. This is a chart I showed a couple weeks ago, this XLE to USO ratio. I pointed out that energy stocks were outperforming relative to crude oil, okay, because XLE divided by USO. And I said that was bullish. And this was a good early buy opportunity. This started occurring in June into early July, well before the sector bottomed, and you can see the nice rally. So it was an early heads up on that. Next. Chart 60, CVX, Chevron, just showing one of the individual names. Again, really good low buy opportunity back here. They had earnings last week, and look at that big pop. Remember, these are in bull markets. Next. Chart 61, real estate. Even this crappy area has had a move up. Now it's at the 50% fib. But be aware, guys, long-term real estate market is going to crash hard. Next. Chart 62, retail. Now this area hasn't been able to get going. The positive thing here I would say is if it could break over here, you have sort of a little rounded base look. Finally, chart 63, consumer discretionary. Pretty nice rally. It's now up to its channel line. Next. Charter 64 utilities. They had a beautiful bull flag pattern back here, busted out. That was a good buying opportunity. They've moved up nicely. Next, Charter 65 industrials. They've also had a nice move. They broke out of their channel line last Wednesday. Big solid move up here in the short term. All right, guys, that does it for the sectors. Let's move on to commodities. Charter 66, DBC, commodity ETF, still down. This is the monthly view, still down about 2%. It lost in July, but it did recover quite a bit. Remember, I discussed this area being big support. Next, Charter 67, there's the weekly view. It rallied, but, it did close off the lows, finding resistance here. Overall, I don't think DBC is going to rally to a new high right now. Maybe form a lower high, then come down again. Then maybe you get a rally. We had a pretty good divergent high way back here. Next. Charter 68, there's the daily view of DBC. Again, you had a low risk buying opportunity down here around the 200-day moving average a couple weeks ago. So it's giving you a trade. Have your stops in place, maybe here, this last high or low. Next. Charter 69, crude oil weekly view up 4.1% last week. This is your long-term support here. It's had a healthy correction from that, May high. Gasoline prices also came down about $1. Next. Charter 70, here's the daily view. Again, it's been finding support at its 200-day moving average here. So it was a logical area to take a long in crude oil. So far, unable to break through that and hold. Next. Charter 71, natural gas, a lot of volatility here. Big move down here, another big move up. Not fun if you live in Europe and the UK because of Putin and cutting off the natural gas supply. So those of you in Europe pay about 3 times more than what we do in the US. Next. Charter 72, natural gas daily view. Next. Charter 73, Boyle, that was the long idea we gave back in July off this black candle here. Was a hell of a trade. Could be flagging here right now at these moving averages. Next, Charter 74, copper, weekly view. Finally, 2 up weeks in a row. As you know, this has been indicative of a recession. It did find some logical support at the 61 fib here, 61.8 fib from the 2020 low to the highs. Logical area to expect to bounce, but more than likely this will form a lower high up here and then come down again. Next. Charter 75, there's the daily view again. Really had to me, it looked bottom down here at this doji, and that gave you a good trade for now. Next. Charter 76, a way to play that I said was JJC, the copper ETF. So if you bought that back here, you have a winning trade. Again, it's kind of thin. But unless you trade copper futures, it's really kind of hard to play copper. Maybe, or unless you're trading some of the stocks like FCX. Next. Charter 77, DBA, agriculture, up 4.6% for the week, bouncing off this 38% fib. Next. Charter 78, DBA on the monthly, found support at this area. Again, it's in a bull market. It started back here. Next. Charter 79, there's the daily view. Really had a beautiful wedge down here with MACD divergence, RSI divergence. Was a good low risk buy opportunity down here. For now, it's meta symmetry target. If it can exceed this, then that will allow for higher prices. Next. Moving on to cryptocurrencies, Charter 80, here's Bitcoin. It rallied up with the market. Again, to me, Bitcoin's going to move with the market, guys. If this bear market rally ends early this fall and we have a big major decline, I would expect crypto to die as well. So be aware. It's going to move with the market. Next. Charter 81, Mara. That was one of the long ideas we presented with cryptos, and this had a nice move from this area at a bull flag here. One I don't have in here tonight is Riot. Riot also has a decent chart still. Next. Charter 82, Ethereum. Again, this broke out of a pattern. It moved higher with the market. But again, I expect crypto is going to move with the market overall. Next. Charter 83, Ethereum ETF. Gave a great trade, as you know. for us. Let's move on. Chart 84, US dollar weekly view down 0.8%. Got a divergent high up here, a couple weeks ago. That's playing out a little bit. The dollar's been absolutely on fire, though. What's also been on fire, guys, is the Russian ruble. Next. Chart 85, US dollar ETF. I think the dollar is set to at least tag this 50-day moving average right around this trend line. That's an area to watch for it to find support. Next. Chart 86, here's the US dollar KISS chart. So this has been long. This actually went long in the KISS system way back in August, way back here. None of these DVTs were hit. So around this ATR could be an area to watch to buy it. Conveniently comes in right around that 50-day moving average. Next. Moving on to Japanese yen. Up 2.1% for the week. Nice rally for the last 2 weeks. Remember, I was calling for a bottom on the yen, and that played out. Let's take a look. Chart 88, here's the daily view of the Japanese yen. I pointed out 2 weeks ago this falling wedge pattern with MACD and RSI divergence, and this played out for a nice trade so far. Next. Chart 88, FXY, that was a way to play it. This wedge, again, it's not a super percentage mover, right? I bought it within the wedge here. If you bought the breakout of the wedge and you paid 68 or whatever, it's had a nice rally here. Exceeding symmetry, then we should get more of a move. But this has played out. Next. Let's move on to precious metals. Chart 90, here's gold, monthly view. Still down 1.4% for the month of July, but it did close off those lows. There was a support area down in here and had a major double top earlier in the year there. Next. Chart 91, there's the weekly view. Again, it had a big support down here. You can see since 2020, this area around 1670 has been support, which we defended. There's this trend line here could now be resistance. You want to see the ratio curl up here. Again, we did hold support. This was resistance up here. Next. Chart 92, there's the daily view. Nice rally off the bottom there. Now it's back at this channel line. Bulls need to break through this confidently and break symmetry. The ratio is trying to curl up some here. Not enough. We need more confirmation. Next. Chart 93, silver, weekly view up 8.5%. Nice move there. Next. Chart 94, silver on the daily. Nice move out of this little pattern. This is resistance up here, though. This 2040 area was previous support, now resistance, and 50-day moving average. Next. Chart 95, Gdx Gold Miners. So we did get a breakout of this channel last week on Wednesday. You could have taken a shot here. I said I wanted to see a break over the channel. And so far, we've had a little move up here. Positive here on the BPGDM did go above its 8 EMA, and the ratio is slightly breaking. So these were triggers. You could have taken a shot long. Now, if it gets up to here, this is your resistance. Next. Chart 96, GDXJ. I liked this better than GDX, and this has had a better move out of this pattern so far. You can see the ratio curled up. Next. Chart 97, SILJ. I also liked this one. This one has had a nice percentage move. Next. Looking over some individual names. Chart 98, AG Majestic Silver. I gave this as a long idea last week. Falling wedge. It's broken out of the wedge. Initial symmetry target would be up in here. If it can exceed symmetry, then we'd expect overall a better bottom to be put in place. Next. Chart 99, Nova Gold was another long idea I gave last week over this 466 area. So far, it's given a little trade. Next. Looking at some other names I'm monitoring. Chart 100, FNV, potential falling wedge here. I want to see it break the wedge. Next. Chart 101, here's a 60-minute view of FNV. You got kind of a rounded bottom look to it. Next. Chart 102, GFI. Again, all these have had hell of a corrections with 17 back here. It's now below 10. If it can break over this channel, I might be interested in buying it. Next. Chart 3 GOLD Barrett Gold. I like this this bottoming pattern down here. Breaking over this could be a nice trigger. You had divergence here at the lows. And it's had a heck of a correction. It was 25, almost 26 bucks back here. So this is it's had a healthy correction. Next. Charter 104, KGC, here's another one that stands out. Little resistance right here to monitor. So there's a few individual precious metal names if the area holds up. Let's follow up with some individual stock discussion. Charter 105, Apple. You know, we were bullish on Apple back here. We thought it would move up with the market, and that's what it's done. And this responded favorably on earnings despite they're actually slowing. So this is at a nice move. Apple is not down much in this bear market at this time. But if we do have that really bad bear market, Apple eventually will get taken to the woodshed as well, guys. You're not going to be safe in your Apple if we have that bear market. Next. Charter 106, Amazon. Also higher low, busted out of the pattern with earnings. Filled this. There was a gap around here. It almost filled it. Next. Charter 107, NVIDIA, follow the Pelosi's. This has been a nice trade out of this wedge. Remember, there's an infrastructure bill, and they bought right before it. Next. Charter 108, Tesla, had a nice move out of this coil. Now it's moving near the 200-day moving average up here. Be aware. But it was a nice trade out of this coil. Next. Charter 109, Papa John's. This was on our long list. Broke out on Thursday. Heavy volume and a big follow through on Friday. All right, guys, that does it for the market. We'll see what happens this week. Remember, I will be gone. I will be leaving on the 3rd. I will be leaving on the 3rd on, let's see what date that is. So Wednesday, early Wednesday morning, I'll be leaving. All right, guys, enjoy the rest of your Sunday. Take care.